The real estate market is cooling off, so experts say. But many borrowers are having some trouble getting financing, and so they're looking to non-conventional mortgages in order to help them get their first home or even to refinance. There are a few options available, in particular the FHA loan. So we're going to go through some particulars as it relates to the FHA loan in this video, as well as some things that you may not have heard about the FHA financing. So stay tuned if you're interested. But first, let me introduce myself. This is the Legal Code, and on this channel we discuss a wide range of legal topics, including what to do as it relates to your small business, estate planning. Is it time to begin estate planning for you or your loved ones, your parents or your grandparents, as well as legal topics that are circulating, legal topics that introduce celebrities and their shenanigans, all sorts of things we discuss. But the bedrock of this channel is so that you can get substantive knowledge, so that you can go out into the world fortified, knowing a few things. So that's always my goal whenever I do a video. So if you like that sort of thing, please don't forget to like and subscribe and share with anyone else you think will find value. Also, I have some legal consultation slots available, so if you would like the chance to work with me or to speak with an attorney to go through some areas, some troubles that you may be having with your small business, or maybe you want to discuss your estate plan or the estate plan of a loved one, we could discuss that in the consultation, and we could go over pitfalls, risks, things to look out for. So if you're interested in that, there is a link in the description box, as well as I have some Legal Code merch that's also linked, so don't forget to purchase if you like the items. And without further ado, let's get into the topic of this video. FHA financing, is it for you? Have you heard of it? What do you need to know about it? What are the particulars? Is it easier to get a mortgage with an FHA loan as opposed to a conventional mortgage? What you need to know. So we'll get into those particulars. Now, the basics. An FHA loan is a government-backed mortgage loan that can allow a less ideal borrower to secure our home because of looser financial requirements. FHA loans are insured by the FHA, which simply means the organization that protects the lender against loss if you default on your loan. People who use FHA typically may have debt such as student loans or a lower credit score. You may even be able to get an FHA loan with bankruptcy or other financial issues. So the bank sees a typical conventional mortgage sees the borrower as more risky, whereas the FHA will relax those requirements. Now, FHA allows a lower down payment. Instead of the 20% that goes with conventional mortgages, a borrower can put down as low as 3.5%, but it comes with a PMI. So it's extremely attractive for first-time home buyers. Although you don't have to be a first-time home buyer in order to qualify, FHA financing also allows you to qualify if you have bankruptcy or other financial issues in your history, as well as the closing costs can be rolled into the loan. And finally, the FHA has a lower credit requirement of 580 and higher to qualify. So there's some leniency, but there's also some additional requirements that offset the leniency. And this includes that the home that you consider must be appraised by an FHA approved appraiser, not a conventional mortgage appraiser. You can only get an FHA loan if the home you consider will also be your primary residence, which means that it can't be an investment property or a second home. You must also occupy the property within 60 days of closing. And an inspection must occur, and the inspection report must report whether the property meets the minimum property standards. So those are the requirements that may be more stringent in those areas, but relaxed in the areas I mentioned earlier. Just because you qualify an FHA loan does not mean you have carte blanche to shop for any home at any price. There are loan limits depending on the county in which you plan to purchase and the unit size. As of 2022, the maximum FHA lending amount for high-cost areas such as metropolitan areas is up to $970,800 for a single-family home. The loan limit is higher for 2, 3, or 4 family dwellings. So just because it's an FHA loan does not mean the interest rate is higher also. FHA interest rates can be competitive compared to conventional mortgages. This is because the government backing decreases your risk potential that you pose to the lender, and so they're able to offer you a competitive rate. The rate, though, depends on several factors, including prevailing interest rate, your income, credit score, the amount you plan to borrow, and your down payment, of course. However, if you plan to buy a 3-family or 4-family dwelling, you will have to meet the self-sufficiency test. The self-sufficiency test is not about you and your financing. Rather, it's designated to determine whether the property you wish to own is considered self-sufficient by FHA standards. This has nothing to do with your income. This test ensures that the total rent that you receive for the units is equal to or greater than the full mortgage payment. So the buyer's monthly mortgage payment, which includes principal and interest, taxes, and insurance, mortgage insurance, is used in comparison with the self-sufficiency rental income. This rental income needs to be over and above the mortgage payment after accounting for vacancy rate and estimated maintenance fees. An FHA appraisal will use a vacancy factor of 25% in the calculation, which accounts for vacancy that the borrower will experience because the unit may not be occupied for the entire year. So 25% is factored in. So let's do an example. If the appraiser calls for rents of $6,000 per month, you will use 75% of that, or $4,500. Thus, your rental income must be at least $4,501 to qualify for a 3 or 4 property loan. Additionally, you must also have 3 months worth of mortgage payments in savings. These income requirements signal to the lender and to FHA that your investment in the property will have a guaranteed return and you won't be operating at a loss. On your end, you can rest easy knowing that mortgage payment is being completely offset by rental income, a major advantage when building your net worth. That's the doorbell. So again, the self-sufficiency test is a very helpful step in the process of purchasing a 3 or 4 unit property. On top of knowing whether or not the property is a good investment, you will have insight into how much rent the local market can tolerate and how much you can accept and look to charge your tenants for similar units. Once you find a property to purchase, an FHA certified appraiser will determine the reasonable rent for those units by researching the surrounding market to determine the ongoing rental prices in the neighborhood. So again, just because you have a rental doesn't mean you have carte blanche to charge whatever you want just because you over improve the units. That's another thing real estate investors need to consider. Don't over improve beyond what the market calls for that unit. So if the estimated rental income exceeds your estimated monthly payment, congratulations, you passed the self-sufficiency test and you'll likely be approved for the mortgage. This is a simple test to use if you're out there shopping for 3 or 4 family units, or perhaps you never considered 3 or 4 family units because you thought they were too pricey. This is something to consider. If your broker is not doing the math with you and factoring it in, this is a telltale sign that you need to find another broker, because all brokers should be aware of this, because you won't get approved for the loan unless you pass this test. And when rates are high, prices are even higher, the FHA self-sufficiency test can be a hindrance to someone's ability to use FHA financing or to buy a 3 or 4 unit property. But it's pivotal to know. and so that you can make get the appropriate financing, and you know what to look out for. So let me know your thoughts. I really wanted to come on here and discuss self-sufficiency tests because it's something I recently experienced with a property that a client of mine is selling, and the buyer unfortunately was unable to pass the self-sufficiency test because their broker did not introduce this to them when shopping for a 3 or 4 family unit. So that was like a disaster, and the seller was upset and the buyer is devastated. So it's something that if you don't know about it, can create a lot of risk for the buyers, because the buyers can go in, put down a down payment, and then the sellers can try to keep the down payment because for inconvenience, something as simple as that. So I don't want buyers to shop, give their down payment, and then get denied because of the self-sufficiency test because their broker did not walk through the math with them. That's why I'm doing this video, because I don't want anyone else to experience this issue, because yeah, sellers will try to keep your down payment for inconvenience, and you don't want to have to go through that. So knowledge is key. Let me know your thoughts. Were you aware of the self-sufficiency tests? I'm going to leave the formula also in the description box. And don't forget to like and subscribe if you found value in this video. If you think it's interesting, let me know what you think about the real estate market. And I will see you next time. Bye-bye.